Give us a sense of where we are with our public health system in this country and what we need to do in response to this virus.
Well, David, I think at this point, the challenge is that we're seeing certain parts of the country where the public health response has become elevated and more aggressive. So here in Northern California, for example, where we do have a cluster of cases in Washington state, in those areas you see public health agencies taking a more aggressive stand to mitigate the spread of the virus. So that's things like social distancing, canceling events, making sure that those who are at risk, the elderly, for example, understand that they need to take additional steps to protect themselves. Now, that is still more or less a regional phenomenon. The question is going to be if and when it begins to take hold more broadly and nationally. You're already seeing CDC, for example, and other federal agencies take a little bit more aggressive stand about things like cruises, telling elderly folks and folks with pre-existing health conditions not to go on cruises. I would expect more of that kind of response going forward. The goal here is to spread things out so that our hospitals and our public health system doesn't become strained like we saw in China with the initial outbreak in the Wuhan area.
Yeah, exactly. We actually heard from Dr. Fauci yesterday on the television saying basically to the elderly, people with compromised systems, don't go on cruise ships no matter what. Also, you probably shouldn't get on airplanes. Good advice. But how do you strike the right balance? We just had a doctor from Stanford, a professor of medicine out there, say you have to draw this balance because for most people this is probably like a flu, maybe not even a very bad flu. There's a specific segment of the population that could really get sick and die as a practical matter. How do you draw the balance between that and what we're seeing right now in the economy and the markets? Because there's a lot of damage being done to the economy and the markets at the moment.
Yeah, and you know, David, it's a combination of many different factors because, first of all, there is a responsibility here to ensure that we are not spreading the virus to those who are susceptible to having some serious adverse health effects as a result. Now, it is the case that the majority of people are experiencing mild to moderate symptoms, but there is this challenge of how you draw the line there. And I think, for example, Stanford's a great example. So Stanford, which is the institution I spent a lot of time at, we've canceled all remaining classes for this quarter. We've gone online, rather, and we're thinking about mitigation strategies for the spring quarter because you've got a bunch of students now who are going out for spring break and potentially then coming back to campus several weeks from now. That kind of migration does tend to create challenges. So again, I think the issue is you're absolutely right. On the one hand, you want to take aggressive mitigation strategies. On the other, you don't want to create panic. It's very difficult, quite frankly, to arbitrate where that line is. And it is up to our public officials to a certain degree to give us the facts, but also to strike a responsible tone about where the threats are and not to be overreacting to this.
And in fairness to the officials, a lot of them, they're struggling themselves to really understand the facts because we don't know all the facts we'd like to know. But beyond that, the public officials have some obligation to take some action that might mitigate some of the effects on all of us. We saw the Fed make the 50 basis point cut last week. That didn't go over so well. We also talked with Larry Kudlow on Friday here at Bloomberg and asked him about possible fiscal response. And this is part of what he had to say.
We're in the camp, Jonathan, that wants timely and targeted micro measures, not large, sweeping, hundreds and hundreds of billions of dollars that don't affect incentives and don't affect growth in any permanent way.
So Lanhee, let's get as specific as we can, because let me give you examples. I think of what he's talking about, the broad-based. That could be sort of a payroll tax cut, for example, across the board, everybody gets it. On the other hand, really give sick pay provisions to specifically people who are exposed to coronavirus. That would be more, I think, micro-targeted. If you were in the White House, how would you make that cut? Because you don't want to leave it too short. On the other hand, you don't want to go too far.
Yeah, I mean, this is going to be a difficult one because there's going to be strong political pressure to make the relief broader and broader. That's what happened with the Recovery Act back in 2008, 2009. That administration was, of course, more inclined to see broad-based relief than this one is, but still there's a lot of political pressure here. So I would focus on affected individuals, obviously. I'd think about affected industries. So, for example, is there some kind of targeted relief that will be necessary to boost travel and tourism, which has been disproportionately hurt by this? But, David, here's the reality. What we're seeing, for example, in some parts of the country is that the entire economy is impacted by this. So small businesses, restaurants, stores, retail, all of these things have downstream effects. So the reality is it is going to be hard to target this, I think, in a way that gets at the effects by region And if you do try to target it, the challenge is then becomes politically, as I said earlier, how do you stave off the argument that we actually need broader and more relief, particularly, I got to mention this, in an election year. Everybody in an election year is oversensitive on this.